Good morning, everyone. Welcome to our Tuesday morning trading room. Here we go. Let me get you my monitor. The market just opened up and a very slight opening gap from where they left off yesterday. We'll take a look here at the Eagle, give us a little bit of a snapshot. You can see it was relatively quiet in the overnight session. A little bit of a rally up, nothing too terribly serious. And now the market encountering some rather substantial resistance just above here around the whole 4600 area. This is on the NASDAQ, of course. Just a quick reminder that even though I tend to focus on the NASDAQ myself, if there's another market you'd like me to take a look at, please let me know. I don't mind looking at, the E-mini or I've got gold up now, so gold's been relatively quiet of late. Might see a little bit of a move higher. Crude oil seeming to want to slip a little bit lower. Here's crude oil on the hawk. We just had a first micro macro cross signal. And that looks like that worked out. Although you can see this first micro macro cross, this is what we were talking about yesterday. Where do you cover this trade so that you don't get stopped out? Well, your last swing high is up here. Unfortunately, with a market like crude, not possible. And well, that would have been enough to hold you in this trade long enough to realize a profit, but it's always a consideration when you're trying to set up your trade and there's not a lot of structure to build your trade off of. Okay, so out of the open here, we've had a couple of sell signals. The first micro macro cross here, that was pre-open, first micro macro cross. So the market open right here. We might get a macro pullback signal we can sell. Anyway, we'll give the market a few minutes to settle in. And then we'll take a look at what shapes up. They always need a few minutes to get enough volume and orders going and whatnot. This is the gold market on the Eagle. And you can see we've had a rule of 3 here, all in a row. Actually, a rule of 4, it turns out, 1, 2, 3, 4 signals. But remember, with the rule of 3, you need to have that test of the extreme. Now, at this point, it's difficult to say whether this little setup here has been our test of the extreme, and now we're really going to see the market rally, or if prices are just getting range bound. So what we're watching for now is we're actually producing a green bar sell. And this bar now is our trigger bar because this has turned the ATR over. So there is a green bar sell available to you here on gold. Just be aware that as far as the setup goes, we may see the market fail at this point and then head higher. So that's the problem when the market starts to waffle like this, when you're not getting the follow through off of your tests, off of your support zones. Now let's see, what's this going to cost me to be wrong? Oh, that's not bad. Here, we'll set it up like so. Risk it a little bit higher. Looking for a second push on the entry. And what I'll do is I'll have a break-even trigger near these lows if in fact gold prices do head lower. Now gold has been trading since 5:20 my time, so they've been open for about an hour already. But I honestly think we're going to see gold rally. So that sell signal that I showed you there, that's a little bit higher on the risk scale. Okay, so a little bit of waffling going on here. Okay, so our macro pullback here, I got distracted here for a moment, I apologize. We were looking at a possible macro pullback. It initiated right here. It turned into a green bar sell that had some decent follow through to it. The green bar sell does tend to develop toward the end of the trend. So that was a little unfortunate that it dipped that far back. Just trying to get a handle on what's going on here today. This hard edge of the eagle is giving me a little bit of pause. Might be getting a double pullback here in the Raptor. Doing my best not to get stuck in a sideways trading range. All right, well, here the eagle is about to produce a trend change signal. And the signal is going to develop, if that warning dot just disappeared, but it looks like that signal is going to develop near the lows. Can I cover it above the highs? Nope, I can't. Let's try that again. How far back can I go? Can I cover above this high? No, can't do that either. One more try. We'll cover mid-range. Now I'm anticipating the triangle hash mark are going to print. I'm also getting a comparable signal here on the Falcon. Technically, this is a trend change signal because the trend line and filter went out of sync here and everything is coming back into sync. Now, here too, we've got the same kind of dilemma. How far back can we cover the trade? Well, if I take it 1, 2, 3, 4, 5 ticks, that's half my profit objective. Or, sorry, a quarter of my profit objective. What if I cover above that swing high? Ay, chihuahua. All right, there we go. And we should be getting a signal here on the hawk. We're getting a first micro macro cross signal. So across the board, we're getting some decent signals here. And you don't need to go, all in like this, where I'm taking signals across the board on all the different birds. I'm doing that more for demonstration purposes. If you're trading the DTS system and you happen to have all three birds, instead of taking a single trade in three different birds, you would probably be better off taking three contracts on one of the birds, whichever one most appeals to you. But you can see we're getting confluence across the signals. And we hit our target there. And we're short on the other two as well. And while we were watching the hawk, we also triggered a double pullback type signal here. Now what I'm going to do is I was going to try to imitate that order. I can still do that. We'll throw an order in here. So we'll catch it on the way down if it comes down. Now, I'm not setting a new order here, folks. What I'm doing is because I missed this order when it first triggered, and I don't recommend this. I'm doing this for demonstration purposes. We're going to pretend that we're in this trade, but I'm going to have to catch it on the next leg lower, if in fact we get another leg lower. Okay, the Falcon trade. Did they slip us? No, not really. But they're just shy of our break-even trigger. So we'll see now. We're going to anticipate that the sellers are going to start pressing. Now, it's always a dilemma, right? Whether we should hold our stops where they are or whether we should start rolling our stops. I'm going to start rolling. I'm going to opt to be more aggressive here today. And they're going to tag me here in a moment. Actually, what I'll do is we'll go above this little swing high right there. We'll give them that much. Okay, well, they're sorting that out. See, we're working on a possible trend change signal now with the Falcon. So that would be a good reason to leave if the Falcon actually generates a buy signal. And we can also cancel our gold trade, which did not trip, but it's starting to reverse and perhaps put in a buy signal. So it's really starting to look like gold is moving sideways here, or perhaps that the buyers are even recovering it early as we anticipated, in which case we should see the buyers try to press the market higher. So right now we're looking at the top end of this trading range, somewhere around 1080 as a possible failure point, and a clue that the sellers, pardon me, that the buyers might take the market higher. Good morning, Jim. Jim giving some advanced decline numbers here. It looks like we're slightly bearish on the day, about 1,050 on the buy and just under 1,600 on the sell. Oh, spoke too soon about gold. Gold's coming right back now. It just popped here real quick. We had a trend change signal on gold right here. So this is on the Falcon, and we're right back with another sell signal on the Eagle. So it's not a lot of structure here, but once again, we may be seeing gold test the bottom end of the trading range. So let me bring that gold trade back. It's here on the Eagle. So we're in sync now, and I would be running a break-even trigger near the bottom end of that trading range if in fact the market does engage us at this point. Okay, now I think we can probably get a little bit more aggressive with our Falcon trade. Trying to give this trade every opportunity to work out. So these current lows, a real obstacle now for the sellers. And let's see what's going on with our Geiger counter. Not a whole lot. Oh, there we go. The sellers pushing it over. See how they're chewing through those orders? That's a good sign for our short position. Okay, get to that break-even trigger now. Come on. Well, you know what? That's probably close enough for me. I'm going to snap it to break-even. This is now on our Falcon trade. Because we're right back down on these lows. Another big obstacle. And if we break there, we've actually got some room. So we're skewered by the median line. Next stop, the primary support around 45.48. Come on, you guys, don't fail now. No! Oh, the sellers are trying. They're chewing through some orders here. Come on. No, you stinkers. Get down. Oh, darn it. Just went back far enough to find my break-even stop. So just making a note in my journal now to see, I'm going to be tracking that to see whether that was too soon to roll that stop in. Okay, now we're getting yet another green bar sell here. Look at our Geiger counter was hard over to the buy side there. We're going to see a little bit of a rally here, I think. It does seem to be spending a little bit more time chewing through the buy orders than the sell orders. Oh, maybe spoke too soon there. We did get some selling action going on. Another red bar buy, a lot of yellow bars. So this could be a transition for the NQ. These lows here at 45.58 still problematic. That's the bottom end of the current trading range, and we really need to see the market trade through that. Geiger counter hard over. No, they're trading punches pretty good here at this particular price level. This whole 45.60 area. I do believe that was substantial the other day. They're really waffling here at the moment. Almost appears as though they're going to try to retest the top end of the trading range again. Gold waffling a little bit. Jim says the DAX is putting in a higher low, a little bit of a swing there. So we'll see whether or not that works out. Excuse me. All right, so here we are right back at the top end of this trading range this morning. Buyer's going to put in an attempt here. Sounds like we're getting quite the storm here this morning, so if I all of a sudden disappear, it's probably because we've had a power failure. Some rather large trees where I live, and they have been known to come down occasionally. Okay, not holding out much hope for our trade now. The buyers looking like they're reversing on us. This is really going to be the last chance for the sellers to step in at the highs. The Raptor here produced a soft edge buy signal, and you're going to say, well, Eric, that's not a soft edge buy, it's on the hard edge. Yeah, but this is kind of like the rule of three thing with the Eagle, right? The structure is there. We've got our test of the extreme, the market comes back, produces a counter trend signal. And because it is counter trend, you do need to be cautious. And I'm probably going to get more aggressive with my stops here on the Eagle now, if they give me a chance to do something with that. A possible green bar sell, so we're not without hope. But it is going to be a little dicey. Now we're getting a first micro macro cross slash macro pullback now here on the Hawk, and some of you are going to be saying, well, Eric, should I take that? You can. It's going to be a short-term scalp. We should see a test of the extreme here, but look at the signal in the context of the chart. I think we're very, very sideways. So if you're going to take this signal, you may want to dial it back a bit, maybe just take a onesie. Regardless, you're going to have to risk it very deep. We'll throw the signal on here so that we can follow it. But whenever the market, I know it eventually has to break out of the range, right? This may well be the move that shoots the market much higher. But at the same time, the context tells me that the market is struggling for direction. If anything, the overnight was a little bit bearish, and now they're hacking about a little bit. So is it a valid signal? Yes, it is. Is it a high probability or a quality type signal? No, not so much. And you can see here's the result, right? We're still moving sideways. We don't really have much direction to it. And it's not to say that this signal won't rally and get us to our profit objective, but these are considerations. And this is why I encourage you to practice, to go back into the chart and look at your first micro macro crosses. Look at your macro pullback signals. See how these appear to be more reliable signals. The market didn't waste much time here going back and forth. Came down, changed direction. You got into yellow bars, got the first micro macro cross, great follow through, got the macro pullback, good follow through. Same thing here, first micro macro cross lower, right? The market changes direction, red bar buy, which we know tends to develop near the end of the trend. All right, so those are the kinds of things that you want to be looking for. These are the higher quality signals versus what we're looking at here. And now you can see here's the red bar buy. We're starting to struggle. If we get one more swing here, which I suspect we will, then it's going to be time to start rolling your stop. Try to minimize your risk exposure. You can get ready for that too. You can get your bar high low ready, or your parabolics, or whatever it is you choose. Something a little bit more aggressive, I think. Or you could even just choose to exit on this failure. here comes that next swing. So now it's time to start rolling your stops. If the market fails here, well, then you're probably done. And we are getting a first micro macro cross lower. Here too, yes, it's a high probability signal, the first micro macro cross, but what are we missing? We're missing that test of the extreme, right? The market's still potentially just range bound. So you get short the first micro macro cross, where am I going to cover it? Do I have to cover it way above the high? Can I cover it maybe above the last swing high up there? Our profit target is near the bottom end of the trading range, so that's good because we can anticipate the market retesting the bottom end of the trading zone, especially since it failed to go higher. But I'm just pointing this out to you because it's not as clean a signal as we would normally like to see, if that makes sense to you. These lows, what a barrier. This whole 45.58 to 45.60 area, what a pain in the backside. Just watching the Geiger counter here for a moment. Nope. All right, well, we'll see here in a moment whether that was a good deal or not. Getting stopped where we did. Just making some notes in my journal here, folks. You know, after yesterday's session, I was halfway expecting a sideways day today. It used to be that you would see the stock indices rally for, 3-4 days, maybe even a week, rally or decline. But now it seems like if you get 2 days of rallies, the next day is going to be flat. So Friday was a pretty good session. Yesterday was a decent session. So today, not so much. Frank is asking, Eric, are there any plans for a profit run session in the near future? No, we haven't really discussed that, Adam and I. Now, I'll tell you the truth, the profit run was to demonstrate that, DTS is a valid trading system because, there's a lot of trading systems out there and people always wonder, well, does it make any money? Well, the whole point of the profit run was to show off. I wouldn't necessarily be as aggressive trading day to day as I was with the profit run. Here's our gold trade. We're testing now the bottom end of this trading range. I said I was going to get more aggressive with my stops when we got down there. So I'm going to snap this trade to break even and force the seller's hand. Alternatively, you could run your stop near the hard edge or at a swing point above the hard edge. The logic being that we know the market encounters the hard edge, sometimes breaks it a little bit, but tends to have some sort of reaction when we get into that hard edge on the eagle. So the choice is yours. Hopefully gold prices will tail off here a little bit below these lows and make it easy on us. And the NQ still stuck sideways. Very tight congestion here this morning. You can see the first hour high and low, or the first half hour high and low. Oh, hooray! Gold made a nice little move lower there, and we're about to hopefully hit our profit target. Now, again, always let your pocketbook be your guide. You know, we're flirting with 270, 250 dollars in open profit there. It's starting to get to that point where it gets a little bit dear to watch, you know, $250 disappear. So don't think there's ever anything wrong with hitting that close button. You know, sometimes I'll watch it and I'll say, okay, I'll give it 200, and if it hits 200, I'll hit the close. And of course, you can always go with a more aggressive stop strategy also if you feel like you're going to tweak yourself out of a trade, which of course I have a tendency to do. I really thought we'd see the NASDAQ tail off a little bit here this morning, but nothing so far. Here we might as well watch gold for a moment. At least it's moving a little bit. All right, so we've got some open profit here. Break-even stops are good, but we should probably get a little bit more aggressive, seeing how we've got 300 and change in open profit. So we're squeezing the market now. We've protected $200, 210. We're just near our profit objective. Come on, gold, get down there. Just give it a little kiss. Here, we're even going to be a little bit tighter still. There. So we'll protect $260, and we're playing with about $50, $60 in profit now. Come on, gold. Get down there. Just checking my Falcon chart. It looks like the next support line at 1072.70. So we're right in the middle of this support and resistance line assortment. There's one right here and one just below us, about another 50 points. Come on, there we go. You can do it. You can do it. Get down there. Oh, there you go. Come on. So we're really put the squeeze on now, and you can see by the width of these bars, there's a lot of activity going on here. Whenever you start to see these wider bars, that's characteristic of a turning point. It doesn't always mean the market's going to turn. It just means there's a whole lot of activity going on here. So once again, $300 open profit. I was going to say if it ticks 310 again, I'll pop out. So not bad. We only left about $40, $50 on the table there. And a fairly decent level trade. Yeah, Tony says that was a lesson in managing your risk more than managing your trade. I think I've shared with you how a trading friend of mine, Tom Loge, used to look at his trades. He used to follow risk reward ratios, but what he would do is he would always look at the risk reward relative to how much open profit there was. So our trade originated something like this. So when you're down here and you've got about $200 in open profit, your risk is, and we're going to round here, we're going to say our risk is $300. Your risk is no longer $300. Your risk is actually $500 because you've got $200 in open profit plus the $300 to your stop loss. So what Tom would do is he would try to maintain a reasonable risk reward ratio, 1-to-1 or 2-to-1, something like that. So he would say, okay, to my profit objective, I've only got, if we've got $200 in open profit, I've only got $200 to go to my profit objective. So he would take his stop loss from up here and he would roll it, say here, so that he only had $100 to his stop. And he would always maintain that. So when we start getting down here and we're, we only have about $50 to $100 to our profit objective. There's no point in leaving our stops way back here, right? Because your risk amount is actually open profit to your stop loss. So that's why we start to squeeze it. Now, did I know the market was going to turn here? No. It's our high probability target. Well, actually, I doubled it. For a market like gold and crude, I tend to double the profit objectives because the markets are a little bit more active. But let's see, was there some structure back here? Did I luck out? No, it was sort of an arbitrary number, but I was just looking at how the bars were getting wider. The Falcon was starting to flatten out a little bit, as was the Hawk. So I didn't want more of that profit to disappear. The pain threshold is always a good way to get out of a trade too. We've all got certain dollar amounts that make us flinch. Some of us are more, some of us are less. It really doesn't matter. But if you start getting to that dollar amount where you get a little twitchy, then you may as well just take your money. So here we are at the top end of the trading range. I'm watching the Geiger counter for a clue whether we're going to get a breakout here or not. And at the moment I would say no. See how the sellers are pouring it on? Frank calls it the PTS, the pain tolerance syndrome. How much pain can you endure? Oh, here I might have spoken too soon. The buyers are fighting it back on the Geiger counter, but you can see we're swinging pretty evenly. The buyers take their turns, the sellers take their turns. Jim managed to scalp a few ticks on the YM. In at 34, he says, out at 45. Good for you. Until we get out of this sideways range, though, it is going to be a tough day. They're trying to reach a little higher. Yeah, so the needle, the average on the Geiger counter, obviously bullish. And it does look like we're going to see a little bit of a move higher here. All right, so they're going to be challenging the top end of the trading range now. Jim has his own version of the pain threshold. He calls his the SPA, the sphincter pucker alert. Yes, there are times where your body does tend to tense up a bit, doesn't it? And that's a good time to take profit. Crude oil very sideways this morning. Here's crude oil on the hawk. They did fall off a little bit out of the open. There's that first micro macro cross we were looking at earlier, but not so much since then. Now we are getting green bar sells with lower highs, but it's very much a sideways market, and I think that's pretty obvious to see there. So the advanced decline's getting a little bit more even, 1,200 on the buy, just over 1,500 on the sell. Still negative though, still a negative 300. Slightly more bullish than when we began the morning. Pardon me. All right, well, a little bit of a move higher. We're still kind of within the range of this morning, though. See, that's kind of our trading range right there. I'm just snooping around to see if there's anything else going on. But not yet. Okay, we've broken now the top end of the trading range. So we would be looking for a retest. Right? When we finally get out of the trading range, we're looking for this is what I refer to as the test. This is the breakout. Then we're going to look for the retest. And hopefully this retest won't go too deep. And if the retest holds, we should generate a buy signal. It's starting to look a little bit like a rounded bottom formation, isn't it? All right, got a first micro macro cross signal here. Oh, actually, I didn't notice this before. We got a trend change signal here on the Falcon. But again, as that one was building, there was no real clue that this was going to be the one that was going to lead to the breakout. But not to worry, we should see a retest. That's usually how these things work. Okay, all the way back to the primary resistance here on the support and resistance suite. And now it looks like we're finally going to see that reaction. Maybe. All right, waiting for that macro pullback, which may be our retest. I'll just leave a trend line sitting there, or a support line. Well, they're just kind of waiting here. Jim says the DAX is starting to roll over a little bit. Gold has retraced back to the hard edge, almost back to the hard edge. So it was a good thing we took our profit when we did. Crude oil still a little wishy-washy. Well, we'll give them a few more minutes here. I may have to close up the room a little bit early. The van is going into the repair shop today. This is from about a month ago when somebody backed into me in the parking lot. It's finally getting repaired. Okay, let's take a look here. Frank is posting a trade. He just bagged 30 ticks on the YM. Let's take a look at that. So he says it was a trend change signal. So I'm assuming it was the Falcon. And he bought just above the resistance line here at 1028. So here was the trend change signal right here. Also was a late filter entry signal. Notice the filter went out of sync, came back into sync. Trend line never changed color. And nice little rally. Well done, Frank. Good eye. Way to spot that. All right, so we got crude oil. Back at resistance now into the hard edge. And we're slowly making our way down here for the retest. Here's the macro pullback signal. Same problem as before. It's going to run away on me, but same problem as before. Where am I going to cover this trade? There's very little structure down here. I guess the top end of the trading range, if it's going to retrace. And now once the market recommits to trying to press higher, then you can start rolling your stops. So we'll take our stops now from down here, and providing this bar finishes strong, there we go, we'll bring our stops up here. And now we probably would be very close to hitting our break-even trigger. One more, there you go, you hit your break-even trigger and then you hit your target. If there was a little bit more structure down here when this trade developed, you know, you could have gotten by with a tighter stop. Oops. Maybe take an extra contract or two, make it a little bit worth your while. And the nice thing about DTS is that usually it will find immediate momentum, but not always, right? Sometimes you're going to get that little extended pullback. The signal will trip a little bit early. When in doubt, you want to get in earlier on the trade rather than later. That's my opinion. Because sometimes when the markets move, people on the daily updates, sometimes when we catch a big runner and people have missed it, they'll be writing me, Eric, can I enter now? Can I enter now? No, you missed it. You have to wait. You can enter now, but there's no way to know how strong the market momentum is. Well, you know, there's indicators and such that might gauge average momentum, but no, the best time to get in is early. Get in early, get out early. Fewer problems that way. Okay, some of these bars getting a little bit wide again, suggesting there's a whole lot of trading activity going on here. And although we hit our profit objective here on the macro pullback signal, it seems a little bit early for the sellers to be stepping up yet again. So the buyer's making a push higher, but we may see a little bit of a retracement here before the next leg up. I was thinking perhaps the market was channeling, but it doesn't look that way. Oh, actually, maybe it is. No, we kind of blew out the bottom end of that trading range right there. All right, you guys, I think we're going to button up the the room a little bit early. Like I said, I got to get my van down to the body shop. And a quick reminder, tomorrow's session is at the open house room, at the public room. Things are rather drab here this morning. If you're going to continue to trade, I suspect, well, it does look as though the buyers do have the market in hand, but I think a retracement may be in order. It looks like we're taking some heat off of this primary resistance line. I would welcome a move back to the hard edge and perhaps a red bar buy or something like that. That would be an easier signal to buy into. Gold has slowed somewhat, but is still in a downtrend, and crude actually slightly bullish today, but I think they may be holding out for tomorrow's inventory report. All right, you guys, we will see you tomorrow morning. We'll talk to you then. Bye for now.